Red flags are indicators of money laundering and terrorist financing for accountants and auditors. Red flag indicators related to clients. The firm's client base includes industries or sectors where opportunities for MLTF are particularly prevalent. The firm's clients include PEPs or persons closely associated with or related to PEPs who are considered as higher risk clients. Clients conducting their business relationship or requesting services in unusual or unconventional circumstances. Clients where the structure or nature of the entity or relationship makes it difficult to identify in a timely manner the true beneficial owner or controlling interests, or clients attempting to obscure understanding of their business, ownership, or the nature of their transactions, such as unexplained use of shell and or shelf companies, front company, etc., without any apparent legal or legitimate tax, business, economic, or other reason. Unexplained use of informal arrangements. Unusual complexity in control or ownership structures without a clear explanation. Client companies that operate a considerable part of their business or have major subsidiaries in countries that may pose higher geographic risk. Clients that are cash and or cash equivalent intensive businesses, where such clients are themselves subject to and regulated for a full range of AML-CFT requirements consistent with the FATF recommendations. This will aid to mitigate the risks. This may include, for example, money or value transfer services or MVTS businesses, operators, brokers, and others providing services in virtual assets, and dealers in precious metals and stones. Businesses that, while not normally cash intensive, appear to have substantial amounts of cash. Non-profit or charitable organizations engaging in transactions for which there appears to be no logical economic purpose, or where there appears to be no link between the stated activity of the organization and other parties in the transaction. Clients using financial intermediaries, financial institutions, or DNFBPs domiciled in other countries that are not subject to adequate AML-CFT laws and measures and that are not adequately supervised by competent authorities or SRBs. Clients who appear to be acting on somebody else's instructions without disclosure. Clients who appear to actively and inexplicably avoid face-to-face meetings or who provide instructions intermittently without legitimate reasons and are otherwise evasive or very difficult to reach when this would not normally be expected. Clients who request the transactions be completed in unusually tight or accelerated timeframes without a reasonable explanation for accelerating the transaction, which would make it difficult or impossible for the accountants to perform a proper risk assessment. Clients with previous convictions for crimes that generated proceeds who instruct accountants to undertake specified activities on their behalf. Clients who have no address or multiple addresses without legitimate reasons. Clients who have funds that are obviously and explicably disproportionate to their circumstances. Clients who change their settlement or execution instructions without appropriate explanation. Clients who change their means of payment for a transaction at the last minute and without justification, or where there is an unexplained lack of information or transparency in the transaction. Clients who insist, without adequate justification or explanation, that transactions be effected exclusively or mainly through the use of virtual assets for the purpose of preserving their anonymity. Clients who offer to pay unusually high levels of fees for services that would not ordinarily warrant such a premium. Unusually high levels of assets or unusually large transactions compared to what might reasonably be expected of clients with a similar profile. Where there are certain transactions, structures, geographical location, international activities, or other factors that are not consistent with the accountant's understanding of the client's business or economic situation. clients who are suspected to be engaged in falsifying activities through the use of false loans, false invoices, and misleading naming conventions. The transfer of the seat of a company to another jurisdiction without any genuine economic activity in the country of destination poses a risk of creation of shell companies which might be used to obscure beneficial ownership. The relationship between employee numbers or structure and nature of the business is divergent from the industry norm. Sudden activity from a previously dormant client without any clear explanation. Indicators that client does not wish to obtain necessary governmental approvals or filings, etc. Reason for client choosing the accountant is unclear given the firm's size, location, or specialization. Frequent or unexplained change of client's professional advisors or members of management. Client is reluctant to provide all the relevant information, or accountants have reasonable grounds to suspect that the information provided is incorrect or insufficient. Clients seeking to obtain residence rights or citizenship in the country of establishment of the accountants in exchange for capital transfers, purchase of property or government bonds, or investment in corporate entities. Red flag indicators related to transaction or service and associated delivery channel. Use of pooled client accounts or safe custody of client money or assets without justification. Situations where advice on the setting up of legal arrangements may be misused to obscure ownership or real economic purpose. Services where accountants may in practice represent or assure the client's standing, reputation, and credibility to third parties without the commensurate knowledge of the client's affairs. Services that are capable of concealing beneficial ownership from competent authorities. Services requested by the client for which the accountant does not have expertise except where the accountant is referring the request to an appropriately trained professional for advice. Non-cash wire transfers through the use of many intercompany transfers within the group to disguise the audit trail. Services that rely heavily on new technologies that may have inherent vulnerabilities to exploitation by criminals, especially those not regulated for AML-CFT. Transfer of real estate or other high-value goods or assets between parties in a time period that is unusually short for similar transactions with no apparent legal, tax, business, economic, or other legitimate reason. Transactions where it is readily apparent to the accountant that there is an adequate consideration where the client does not provide legitimate reasons for the transaction. Administrative arrangements concerning estates where the deceased was known to the accountant as being a person who had been convicted of proceeds generating crimes. Use of virtual assets and other anonymous means of payment and wealth transfer within the transaction without apparent legal, tax, business, economic, or other legitimate reason. Transactions using unusual means of payment, example, precious metals or stones. The postponement of a payment for an asset or service delivered immediately to a date far from the moment at which payment would normally be expected to occur without appropriate assurances that payment will be made. Unexplained establishment of unusual conditions or clauses in credit arrangements that do not reflect the commercial position between the parties and may require accountants to be aware of risks. Transfers of goods that are inherently difficult to value, where this is not common for the type of clients, transaction, or with accountants' normal course of business, such as a transfer to a corporate entity or generally without any appropriate explanation. Successive capital or other contributions in a short period of time to the same company with no apparent legal, tax, business, economic, or other legitimate reason. Acquisitions of businesses in liquidation with no apparent legal, tax, business, economic, or other legitimate reason. Power of representation given in unusual conditions and the stated reasons for these conditions are unclear or illogical. transactions involving closely connected persons and for which the client and/or its financial advisors provide inconsistent or irrational explanations and are subsequently unwilling or unable to explain by reference to legal, tax, business, economic, or other legitimate reason. Situations where a nominee is being used with no apparent legal, tax, business, economic, or other legitimate reason. Payments received from unassociated or unknown third parties and payments for fees in cash, where this would not be a typical method of payment. Commercial, private, or real property transactions or services to be carried out by the client with no apparent legitimate business, economic, tax, family governance, or legal reasons. Existence of suspicions regarding fraudulent transactions or transactions that are improperly accounted for. Red flag indicators related to client's geographic location. A client may be higher risk when features of their business are connected to a higher risk country as regards the origin or current location of the source of wealth or funds, where the services are provided, the client's country of incorporation or domicile, the location of the client's major operations, the beneficial owner's country of domicile, or target company's country of incorporation and location of major operations for potential acquisitions. There is no universally agreed definition of a higher risk country or geographic area, but accountants should pay attention to those countries that are countries or areas identified by credible sources as providing funding or support for terrorist activities or that have designated terrorist organizations operating within them. Countries identified by credible sources as having significant levels of organized crime, corruption, or other criminal activity. Countries subject to sanctions, embargoes, or similar measures issued by international organizations such as the United Nations. Countries identified by credible sources as having weak governance, law enforcement, and regulatory regimes, including countries identified by FATF statements as having weak AML-CFT regimes. Countries identified by credible sources to be uncooperative in providing beneficial ownership information to competent authorities,